Where else on crypto YouTuber did you see somebody giving you specific warning signs like the video with the thumbnail that you see behind you when the price was where you're seeing pointing in the chart right now on November 5th? I'll wait. Now let me show you a couple things I said within that video. You ready? If that were to happen, that's going to take all November to it's going to be a red November. And the same video. What I'm saying is, if you're not prepared for this crap to happen, you're going to get screwed. Boom. So let me show you something in the charts that is very similar. The tides might be changing towards the upside. However, we specifically have disagreement between the lower time frames and the higher time frames. Let me show you what that means for you. You ready? I'm ready. Let's get it. All right. Hopefully that was an emotional intro. All right, so what I'm going to be looking at is the difference between the 1 hour chart and the 12-hour chart very, very specifically. So the 12-hour chart is a fantastic mixture between mid-term timeframes and larger-term timeframes. It often is the chart that you want to look at when you know that if you get a signal on this chart that's typically bullish, that it has a strong chance of holding up, as opposed to a bullish cross or a bullish signal on the 1 hour chart. The shelf life of that is so short-lived that getting even a mid macro move out of that is very, very low. Because if you get a bullish sign, yeah, sometimes you get a move like this, but then it falls right back down. And the real mid macro move happened here. That's when you get the 12-hour signals versus 1 hour signals that are constant. 1 hour signal, 1 hour signal, 1 hour signal, 1 hour signal, right? So the shelf life is very short within these, but the shelf life of a 12-hour time frame, which is happening now, however, it's disagreeing with the short-term time frame, which is kind of odd, or not odd, but it is not compelling. So I'm going to show you, hey, short-term timeframes are bad, but midterm timeframe said this could be a midterm shift, which could lead to a very powerful move. That's what I want to show you in this video. So what we're going to do is we're going to start off with the 1 hour chart. We are looking at the 200 EMA. So as weird as this is going to sound, and I know that it's going to be hard to accept, especially a lot of people to my channel, right? So you want to see a YouTuber as similar to me as possible, who might have a crystal ball, but even I don't have a crystal ball. I give you probabilities. If this, then that. If this, then that, right? So it could go up, it could go down, it could go sideways. That's the case every day. However, right now, here are the probabilities of each of the three happening. And if you see this happening, that means the second one now becomes the most probable, for example, right? So that's what I give you on my channel. I don't give you the crystal ball. If you're looking for somebody who it's going up, and if you find those people, you need to stop using them as a source of information. You need to get off their channel and you need to look at it for other sources of information. I'm telling you. All right. So as unfortunate as what I'm about to say is for most people who don't understand charts very well, the 1 hour 200 EMA, which is this orange line, it has a strong probability. So this is the lower time frames that I keep talking about. So 1 hour, and I'll jump in the 12 hour here soon. It has a probability of continuing to be resistance until, now here's what I'm about to say you won't like, until it isn't. So essentially, it's saying the trend's the trend's your friend. If I could say that word, that phrase correctly, yeah. But here's how you visualize that: it has a probability of making price go down until it becomes a bounce point. Essentially, is what it's saying. Until price can bounce on there, it will be resistance. So price needs to flip this from resistance to support, and then here's the key. Once that happens, then the lower time frames are going to agree with the larger time frames, and shit's probably going to go up. That's when you have a big edge. Do you hear what I'm saying? You hear what I'm saying? All right. So here's the quick moment where you're going to want to flip your phones or get flipped off. Hey, Dan, what does that mean? It means your phone is horizontal, flip it vertically so you can hit the like button, and I can continue making, it's going to help the algo for me so I can continue making content for you. And what's going to help me out even more, if you leave me a quick comment, even if it's a period without the tampon, or you leave me a funny comment, just yell tacos, or I pooped today, something random, I sleep with the fan on, I don't care. Leave me a quick comment down below simply to help out the algo. And also, if you have not seen my Twitter, my Twitter handle is Cosas Verdes with the number 2 at the end. I tend to give both Bitcoin whole market updates and altcoin updates on that. So when I don't make video, I'm not active on YouTube. I'm typically more active on Twitter. It's a good tit for tat. So go ahead and check me out there, and let's dive back into the charts. All right, so as of now, the 1 hour time frame is definitely saying beyond a reasonable doubt that the probability is to the downside. And because of my previous analyses on where that would go, if you haven't seen my previous YouTube videos, I you should already. So for new viewers, you would want to go to my channel and look for the thumbnail that has me with blue eyes and stuff like that, right? So it's before my thumbnails got better just a few days ago, before I put a lot of effort. You want to look for that. It's like all blue, my outlines blue, all that stuff. You want to check that out. I give you the exact reason why, where and why the next downside targets would be, and that level is between 50 to 53K. Okay, and essentially it's the weekly 21 EMA. So right now, the weekly 21 EMA, this level is more probable to be hit because it's more probable that the orange is resistance, resistance, resistance until it becomes support. And once it becomes support, then the probabilities flip a little bit. And when the probabilities flip on the 1 hour chart, that means they're already flipped on the 12-hour chart. Therefore, the likelihood of the overall market actually going back up is higher. Is that making any sense? Good. You want to look at the 12-hour chart to see what I'm saying? All right. Let's dive in. Okay, here we go. Okay, yeah, this is a very exciting moment. I mean, things could really be turning around, but yeah, this is in a state of awkward moment here. This is honestly when no trade is the best trade unless, yeah, I mean, this is typically a no trade is the best trade. All right, so here we go. So I've had for months, since this Wyckoff, I said the way that's going to recover out of this Wyckoff when it dropped from 58 to 29K, right? I kept saying over and over and over on my channel, this next pump up, whenever it happens, will either be like this one or this one. So this little fractal or this little fractal. There are multiple times in my videos where I took this fractal and I copied and pasted. Okay, what would it do? Oddly enough, it looks like this double fractal is what is going to play out. But if you cut it in half, it looks like the second half will be our current version of first half with price going below the orange line. But on the first half, price stuck its landing on the 12-hour 200 EMA. So sticking its landing, not below. And here's the most important part. You're getting bullish divergence on the 12-hour chart as the daily Stokes are wanting to curl up. That is your indication that, it's so close. This could be this midterm reversal back up. Okay, so it's so close. The dominoes are like the shorter term time frames are just getting ready to fall over to the bullish zone, but it's all bearish until it happens. See what I'm saying? So once the bullish, once this lower term time frame dominoes can all fall in a bullish direction, they will topple over the larger dominoes, the 12-hour, the daily, which are already leaning daily. It'll just topple it over, and you should get a flood to the upside, and Bitcoin should scream above 70K. All right, so let me show you what I'm talking about with this bullish divergence here. I'm on the 12-hour chart. Just structurally, though, I'm already on the 12-hour chart. Just structurally, I think this first half is what's happening on this second pump. So see how this is one pump, this is two pumps? I think they're just inversed like this. That really looks like what is happening, and we're getting ready to have just a nasty run up to the upside. However, typically when I give these, midterm trend reversals, I'm usually 4 days early, just like how I showed you at the beginning of the video. I gave that reversal sign, and then there was a bull trap to the upside, which took Bitcoin to all-time high, 69K, and then it dropped, right? So my alerts, on these things, so like one of the best ways to determine, okay, what do I do with my portfolio? Okay, what does Cosas Verde say? And if it's a trend reversal, even in the midterm, right? Okay, just give it 4 more days, right? It's almost as if whales are listening to me say, screw him, we're going to wait for him to make that happen. We were going to do it today, but we're delaying our plans. It's almost as if the crypto gods are hearing me on these midterm reversal cars, because I've gone back in time, and usually when I'm making, so even back to Wyckoff, I was just barely off. I flipped bullish right here, but the whole time I was yelling bearish, big. I was probably the first one on crypto, among the top handful of anybody saying 40K. I was saying 42 to 40K Bitcoin here, while everybody's like, are you kidding me? This is, insanely bullish. But right when I flipped bullish, it dropped 2 days later. So I was 2 days off, right? So I got worn out from the bearishness, and my signals were several days off here. So I'm often a little early. So I want you to definitely take that in a grain of salt, because my calls are also a form of statistics, right? My midterm reversal calls statistically have a strong chance of being slightly too early, because I'm a little antsy. I'm more of an aggressive trader. So definitely take what I'm saying with a grain of salt. All right, so let me show you that bullish divergence here, but that is my definite disclaimer. And, you know, sometimes you can look at my analysis as if it were a type of tool in your shed, right? So for city people, that doesn't make any sense. That's a horrible analogy, but just a tool that you use in your house, like a type of knife, like a cheese knife versus an 8-inch petite chef knife or whatever. For people who cook, for people in the city who don't cook, well, shit, I'm coming up short on analogies here, but I'm a type of knife for you, right? So, and just imagine that the way to use my knife, so use my analysis like a knife, there are ways to use it properly. So don't open a freaking can with my analysis, right? And there are ways to use it totally properly. Let's say I'm an amazing cheese knife from Cutco. Yeah, use me for cheese. However, if you also need to cut me for steak, yeah, I'm a pretty good knife as well, even though I am a cheese knife, right? So I'm trying to show you how to utilize best my analysis, particular to midterm potential reversals to the upside. I'm often early, so you know you're essentially using me as a cheese knife to cut some meat. It works, but just know, you know, the statistics behind it. I'm usually a little early. All right, so enough ranting on that. So here's your bullish divergence. You have one, so here you have a lower low on RSI here when price made a higher low, and then you made a lower low in price. So let me stretch this out. So see, price here made a lower low, while RSI made a higher low. And oftentimes on the 12-hour chart, whether it's bearish or bullish, the first strike of that divergence often shows you when that midterm reversal will happen. Not a macro reversal where things tank, you know, down, you know, from here to here, from 58 to 20 to 29K, but rather 12-hour gives you good signals here, stuff like that. These are the 12-hour signals are for this type of move, this type of move, this type of move, this type of move. That's the type of shelf life, right? And the 1-hour time frame is even shorter. Okay, so anyway, it looks like once Bitcoin can get that move up, what you're then looking for to more seal the deal that was the low. Okay, so your next step is this line right here, and I believe it's coming in at 60,800. You're going to want to look for a daily closure above 60,800, and I'm going to make that gray. I thought I already had this on my chart. Sorry about that. And that is going to be your next level up in realizing, hey, the price action that just happened, we can put that in the past. It's upward and onward from here, but it's still not guaranteed at that point. There is a next level. So let's say so again, we always have to, so in this analysis, you're starting on the 1-hour chart. Your first clue is that this orange line becomes support. That's step one. Okay. Step two is the 12-hour chart. It's already given signs for a midterm reversal, but you need at least a 12-hour or a daily closure above the line here, 60,800. And then on the daily chart, though, moving up, your odds become even greater, okay? Even greater for a sustained up move once you can particularly close a daily candle above 65.5. So once a daily is closed above these, interpreting this as just a bull trap, and it doesn't matter. So therefore, once a daily can close above here, that is when your probabilities are just to the upside, but they are strong, like 80+% chance to the upside, saying that the likelihood of revisiting these lows here soon is extremely low, as in 20% or less once that happens. So these are the exact levels, things to look for as your probabilities get better and better and better. The first sign is the 1-hour candles start closing and use the 200 EMA on the 1-hour chart as support. That's step one. Step two is the 12-hour chart closes candles above 60,800. Okay. Step three is the daily chart can close daily candles above 65,500. And with each one of those, let's say on the 1-hour chart, once you get your signal, you might be 50-50. Once Bitcoin closes above 6,800, you might be 60-40 in terms of that was the low. Once Bitcoin closes a daily above 65,500 roughly, then your odds might not be high as 80, but it might be 70. So you might get 10% increase in chances that was the low for each of these happening. However, the more, so this is kind of like a yin and yang, right? So imagine, yin yang where it's split in half or whatever, right? Like two hearts. So I'm not trying to do this corny stuff to you, but you know what yin and yang is, right? So for every layer of security or safety that you want in your trade, you're sacrificing aggressively hitting the bottoms, right? So you're sacrificing some of the move. You're not catching the lows, but you're catching more safety. But for every, measure that you want to try to catch the lows with the first sign of 12 hour, for example, right now would be an aggressive trade because the 1 hour doesn't even agree. So people who are trying to take this 12-hour signal, knowing that the 1 hour is still saying down, what you're doing is in this case, you are saying, hey, I would rather try to catch the lows for the sacrifice of safety in my trade with the idea that this could really tank down and I don't quite have the edge. Am I making sense here? All right. So let me show you Ethereum real quick, because Ethereum is what was leading this up and down almost like a horse in my theory. So basically what we're looking for on Ethereum is I have an origin line marked by this gray line, which will be, I've already showed you in my last video how to draw that. And this blue line is the previous wick high from May. So there's essentially a triangle forming here. It's however many, the more times that this can be proved as support, I think that's better. So the longer it can go sideways without closing full daily candles below this line, the more likely that then the Bitcoin 1 hour chart will close above, then, and then Ethereum keeps using that support. And then that gives you a better chance that then Bitcoin closes above 60,800 and then Ethereum keeps bouncing. And then that gives you a better chance that Bitcoin closes a candle above 65,500 roughly. So these are the things to be looking out for on Ethereum. And I go into further detail on specifically Ethereum and how it's essentially pulling Bitcoin around like a horse in my previous video, if you want to check that out. So, hey, remember everybody, remember this. Be careful. This is a choppy market. Don't try to be going for the big one. If you are in profitable scenarios right now, you might start taking profits early and take them frequently in choppy markets. All right. So if you want to make a little bit more money, new viewers, by watching a pretty easy trick, go ahead and click this video that's going to be popping up right here. And for returning viewers, if you want to make more money on a video you might have missed, you can click this video here. New viewers, make more money with this video here. Returning viewers, make more money with that video here. And peace out. We'll see you next time.